Hi, and thanks for checking out the Coin Stories podcast. I'm Natalie Brunell, and I'm honored to share my guest this week is the one and only Michael Saylor. Michael is an entrepreneur, an executive, an inventor, author, and philanthropist, and there's arguably no one in the business world with a stronger conviction in Bitcoin. As chairman and CEO of his company, MicroStrategy, he is the first CEO of a publicly listed company to make a long-term investment in Bitcoin. MicroStrategy currently owns more than 100,000 coins. Make sure to check out his website, hope.com, for all the Bitcoin resources you could want. And without further ado, I'm so grateful to share Michael's story. All right, Michael, thank you so much for joining me. Super excited to talk to you. And I want to take it all the way back and start at the very beginning. I read that you were born in Nebraska, moved to Ohio at some point, and you lived on Air Force bases. You were basically an Air Force brat, right?
Yeah, my father was a non-commissioned officer in the Air Force, and he worked on aircraft, and we lived all over the world in New Zealand and Japan and Colorado and Nebraska, Florida, Virginia. And, I graduated from high school in Ohio. So Wright-Patterson Air Force Base, Dayton, just outside of Dayton, Ohio. And I was always on military bases.
And you had sort of your own Top Gun fantasy, right? You wanted to be like a fighter pilot astronaut.
Well, I mean, if you grew up on Air Force bases, watching airplanes fly all over you, and if you're a science fiction fan, and I read lots and lots of science fiction, it was my genre of choice growing up, then you can't help but fantasize about being a astronaut, fighter pilot, spaceship designer.
So you went after the footsteps of your dad, right? You got an Air Force scholarship. You went to MIT.
Yeah, I got a scholarship from the Air Force, uh, went to MIT, and I studied aerospace engineering with a specialty in spaceship design. And while I was in the Air Force, I went to Lackland Air Force Base as a cadet. And then I went and learned to fly at Hondo Airfield in West Texas, just outside of Lackland Air Force Base. It was a very hot July and August, and it would be about 110 degrees on the runway. And we were getting into these T-41s, and they're like military versions of Cessna 172s, but they have no air conditioning. And so we get in the airplane, and then the one thing you definitely want to do is get the plane going, because there's no air conditioning. You open up this little part of the window, and if you get going fast, the temperature would drop from 110 degrees to just 90 degrees. And then you want to get up high so the temperature will fall into the mid 80s. If you're lucky, you sweat a lot.
Yeah, no, I bet. But something changed your track, right? Two things happened, and you didn't end up going down the fighter pilot route. I saw that first Reagan ended the Cold War, and then you were diagnosed with a benign heart murmur. So what happened there?
Yeah, it was a successive 1-2 punch. I think my final flight physical in my senior year, and it would have been like January, late 1986 or early 1987 January. I was I worried my entire undergraduate career that all my studying would cause my eyes to deteriorate from 20/20. So that was my never-ending nightmare. But my eyes were fine when they gave me the test. But then a doctor thought he heard some kind of heart murmur, and they diagnosed me with a benign heart murmur. And I mean, 10 years later, they undiagnosed it, but at the time they made a misdiagnosis. And that disqualified me from flying aircraft in the Air Force. So I was a little bit distraught, since I spent my entire career thinking I was going to be a pilot. I had a very simple plan: pilot, test pilot, astronaut. It turns out that that one of my friends from high school is a guy, Greg Johnson, and Greg Johnson was a bit ahead of me from my same high school. And he actually ended up going to the Air Force Academy, becoming a fighter pilot, a test pilot, and an astronaut. And He flew around the Earth, flew twice on the space shuttle. So that was my idea. And I watched a role model do it, but I got knocked out because of that misdiagnosis. And I would have gone as an engineer in the Air Force for about 5 years. But Reagan won the Cold War. And by 1987, Congress had, I think they'd recognized that they didn't need the same degree of military budget. So they cut the military funding in half. They're doing a forced drawdown, and they had too many officers, probably just too many people coming into the military. And so they wanted to discourage people. And then one way they discouraged them is they went to all the people in the ROTC programs and they told us that if we wanted to go active duty, we'd have to wait about 2 years or more before we got called up, or we could go into the Air Force Reserve or the National Guard. So I guess about half of my class just went into the Air Force Reserve or the Guard. I was kind of like the lost generation. Every graduating class before went into the military, and every graduating class after went on an active duty. But the class of 87 was like the cracking of the whip. It was that one odd year. And so a lot of us got catapulted out into the civilian world. And so I found myself a civilian with a few weeks to go to graduation. And that kind of drove my career in an odd, unexpected direction.
So what were you thinking at that point that you wanted to do? And backing up even further, when you were young, I mean, wanting to be like a fighter pilot or an astronaut, did you grow up wanting to be rich? Like, did you think about money when you were young?
I think there's four things I wanted to be in succession. And I think that the four things every American male wanted to be in the 80s. I wanted to be a rock star, or I wanted to be a fighter pilot, or I wanted to be a professor, or I wanted to be a CEO. Not rich. Rich was like unfathomable. These were just job aspirations. I never met anybody rich or with money before in my life. I think the richest person in my hometown was the dentist. So that was our idea of wealthy, the dentist. And I think the dentist had a house on a half-acre lot, which looked like a large house in the town of Fairborn, Ohio. Population 28,000. And yeah, so in high school, I wanted to be the rock star. I played in a rock band. And then at some point, I realized that most musicians don't make a lot of money, and the odds were against me. And so once, I was a little bit of a statistician. So once I concluded that the odds of me being a successful rock and roll musician were 1 in 1,000 or 1 in 10,000, I decided I should probably try getting the engineering degree. So I went and I got the engineering degree because I figured if I failed at music, I could at least afford to pay for my own amplifiers and musical equipment and guitars. So it was kind of a hedged bet. And then I, got more enthusiastic about going and flying. And when I couldn't fly anymore, I really wanted to be a professor. So I wanted to get a PhD. But I was only able to do that around February, March of my senior year. And that was enough time for me to get into a PhD program. But all of the financial aid and all the fellowships had been dispensed by that semester. So I couldn't afford it. It was very expensive. The Air Force had paid for my undergraduate degree. I think my family's life savings were enough to maybe afford 3 weeks of college. There's no money. And so I couldn't really afford to pay for it. So I thought I'll just go and work for a year or 2 years, and then I'll reapply for the fellowship, and then I'll go back and get a PhD, and then I will be a teacher or a professor or something, because that seemed like an honorable thing to do. And so then I went and I got my first job. And that didn't work the way I expected. My boss kind of quit the company about 4 months after I got there, and I ended up switching jobs about 9 months after I got there, and I started working for the DuPont Corporation. And I was building computer simulations for them. And I guess when I got to be about 24, I was 2 years out of school. I got that fellowship I needed to go back and get my PhD. And I tendered my resignation to DuPont. And they asked me to stay. They wanted me to finish this computer model. And I didn't really think much about it, but the computer simulation was going to be used to acquire about $1.5 billion of capital in a capital budget. So I was this kid making 50 grand a year, and I was on the critical path to someone getting $1.5 billion. And so I guess they decided, well, we should just give the kid a raise or give the kid whatever he wants, because the $1 billion is more important than the kid going back to college. But I could not be bought. I couldn't, they're like, do you want a raise? No, I don't want a raise. What do you want? Well, I know I'm not going to be the CEO of the DuPont Corporation. I'm not a chemical engineer, and I don't have 30 years. So I want to be a professor. And they said, well, what do you want to do if I can't be a rock star and I can't be an astronaut and I can't be a professor? I went back and there's only one thing left on my list, which is to be CEO. So if you let me start my own company, then I'll stick around. And starting my own company meant, well, I had no money. So I got a $5,000 furniture loan. That's the only source of unsecured financing that a 20-something can get, at least at that time. But I knew 5,000 wasn't going to make it. So I needed more money than that. So I got the DuPont Corporation to give me a couple of $1 million of contracts and $250,000 initial contract and $100,000 cash advance. And that was back when 100,000 was worth more than it is today.
Oh yeah.
I actually figured, Natalie, that I could go 7 years on the 100 grand.
Because your rent was what, like $700? Yeah.
On the 100 grand. And then they also gave me free office space and computer equipment. They kind of let me be a little bureau inside DuPont. So I set up in the middle of DuPont headquarters on my own floor, but I had my own company. And I was able to hire over a bunch of people that worked for me that had worked for DuPont. So DuPont incubated the business. And it was just kind of a lucky fluke. I mean, it only would happen if you just happen to be in the right place at the right time with I had the right relationships and people liked me. And at the end of the day, okay, so we give the kid $500,000 contract or $250,000 contract. We're trying to get the $1 billion. So I guess it made sense to them. I thought it was a good deal for me. And in my mind, I figured, well, when the business doesn't work anymore, if we fail, I'm just going back to college to get that PhD. And the first year we did about 750,000 in revenue, and the next year about 1 million, and the next year 2 million, the next year 4 million. And then we had a slow year, we did 5 million, and then we did 10 million, and then we did 20 million. Then everybody started lobbying me to take the company public. And then we thought, well, that might be fun. We'll try that. And then we went public, and I'm just kind of stuck. And I realized I was going to be the least educated person in my company. All the people who work for me have these master's degrees and PhDs, and I'm just the entrepreneur. I don't quite have college dropout status of Steve Jobs or Zuckerberg or Larry Ellison or Bill Gates or Michael Dell. So I didn't quite achieve that, but I kind of style myself as kind of a dropout because I dropped out of a graduate degree program in order to start a company. So that's my sacrifice to practicality.
Do you ever think back on that time, like early in your career, and what vision did you have for your company? Because it sounds like you were almost you felt like you got lucky a lot and you were almost living day to day, facing the challenges that might come. And it sounds like you were surprised that you kept surviving.
I just didn't want to work for anybody else, Natalie.
Makes sense.
I figured use technology to do something good, right? So we were always using technology to help people make better decisions. And there was always a new technology. If it was the new Apple computer or the new Windows or the new database or the new internet or the new thing. There's always a new thing that you could do something useful with. And so I figured I would help people make better decisions, make the world more intelligent, and I wouldn't have to work for somebody else.
Was there a point where you said, "Wow, I've made it. Like I'm successful"?
I'm still working on that.
And I read that before Bitcoin, you owned other scarce assets within cyberspace, right? Domains. You had all these domains and you made some good money from that. Can you talk a little bit about that?
It all started in the mid 90s when we got email. And we got email, and all of a sudden your company's MicroStrategy, so you got to own MicroStrategy.com. So then there was that big vanity license plates when everybody used to like their vanity license plates. So we had our vanity emails. So of course I'm going to have Saylor at MicroStrategy.com. And then I thought, MicroStrategy.com's cool, but what if I just had strategy.com? I mean, because that's even cooler, because people used to always misspell MicroStrategy. They would all be like, is that MicroStrategies? You're from MicroStrategies, right? Or and it just kind of irked me. Like people could never figure out whether we're a MicroStrategy. Like strategy is like its own plural, guys. There's no strategies. And I just realized you could talk yourself till you're blue in the face, but if you just change the word to strategy, then they wouldn't screw it up. So I thought, can we buy strategy.com? And lo and behold, we could buy strategy.com. So then I started thinking, what other words can I buy? And I thought, well, I could be Michael at strategy.com, but wouldn't it be cool if I was me at Michael.com? So I went and I found that I could buy Michael. And I thought, well, what about Mike? So, you know about Nike, Nike, that's kind of a cool brand. I thought to myself, if you have a very short word that blocks well on a sign, like Nike, Coke, Mike. And so I got this idea that, what if you could just own the word? And Michael is the archangel in heaven. Like when God is out, Michael's in charge of heaven. I thought that was kind of cool. And I thought maybe Michael Jackson or Michael Jordan might want to buy it one day. And if not, Michael. So we started looking for cool domains, and we bought every word we could buy. So we bought wisdom.
Wow. And hope. Hope, right?
We bought hope. We bought courage. Speaker. We bought voice. We bought angel. I mean, angel.com, I figured that would be neat. And we bought alarm, and we bought alert. And then I even bought some other words. I remember Jane Austen's book, Emma.
Uh-huh.
I bought Emma. And I bought Usher. And then I bought Frank.
And how much are these costing you? Or how much were domains back then? They ranged?
We started paying like 25 grand. It's back in the days when people thought I got to pay $19 for a domain. And I had more than $19. So I think we might have paid 10 or 20 grand for some. And then we started paying 100 grand. And the most we ever paid was maybe a couple $100,000.
Wow.
And a couple $100,000 would have been daunting to me in that first year in business. But once we got to be a $30-40 million business, then we could afford to pay it. And I thought, what's $100,000 or $200,000 to own a word? And my thinking was, the English language has been around nearly 1,000 years. I think it'll be good around for another 1,000 years. So we eventually created some businesses on these. So we created a business called alarm.com.
Yeah.
And you can imagine it's kind of a home automation alarm system plugged into the internet. And today that's a publicly traded company worth about $4 billion on NASDAQ. So I think it generally worked out. We ended up creating more than $100 million business from Angel. Alarm is a $4 billion business today. We sold voice for $30 million, just the word. I didn't really want to sell it, Natalie. I liked voice, but I figured that was the highest amount that anybody had ever paid for just a naked domain name. And I kind of wanted to create that comparable in the market so that, the next time someone wants something like this, they'll pay me 100 million or
Wow.
hundreds of millions. We'll see what happens. I don't know. But yeah, it's scarce. You could think about .com as like it's the primary domain for it's just the primary blockchain for domains, if you will.
Mhm.
And just like Bitcoin's the strongest cryptocurrency, .com is the strongest, domain thread.
Yeah. Well, even recently, I mean, you weren't thinking really about Bitcoin until 2020. And it seems like you've really done well on the fiat system. So, I mean, why did you start to think that there's an issue with it?
I did well creating my own company, and I had other interesting ventures that I launched, like Angel and Alarm. And then I was an early investor in all the mobile wave companies. So I did well with Facebook and Amazon and Apple and Google and the like. And I have no complaints about that. I think that when I got to 2020 in March, my thought was the big tech trade, it's no longer unique. And everybody agrees with me that Apple, Amazon, Facebook, and Google are digital dominant monopoly networks. That's not debatable. It would have been a debate in the year 2010. And then it was, so if you're 10 years before everybody else, then it's good investment. I think the best investments are when you buy into a technology trend that everybody needs, nobody can stop, and nobody understands. And that would describe Facebook before they came public, or Twitter before they came public, or Amazon back in 2010 or 2011. They were already 10 years into their run as digital retail. There was no competitor, but 98% of Wall Street was hating on them. They don't make any money. Amazon doesn't make any money. How can you buy Amazon? They don't make any money. Well, one day everybody will want to order things from their smartphone, and they're the only app's going to run on a smartphone. So when 5 billion people have a smartphone, then maybe you want to own the icon, which stands for retail on the phone, and then everybody's money is going to squeeze through that icon. So those are good investments then, if it's obvious it's going to happen, when there's so much momentum and inertia, you can't stop it. But when people still don't understand it, I would say by 2020, everybody understood Amazon. Like how could you not understand Amazon? You were locked in your home and you were going to starve to death. And so that was the year when all the late adopters downloaded the Amazon app and got an account. You would have had to be really creative to not use Amazon. And YouTube and Google's the same way. It's like, if you can't go to the movies and you can't leave your home and you can't go to school, then maybe you discover streaming video. So I think Amazon, Apple, Facebook, and Google, their transition from being fast growing digital innovators to being quasi technology utilities that are almost monopolies in their own right, that transition was 2020. So at that point, I looked and I said, well, are those things going to go up by a factor of 10 from here? And I didn't really think so. I thought that they're more like cash cow utilities, and yeah, you could hold them, but they're not the same companies they were anymore. There's too much politics getting involved, right? I mean, there are going to be congressional hearings about what can Apple do and what can Twitter do and what can Facebook do and what can Amazon do, and should you unionize them, and is it fair that they, should they have the Apple Store? I don't know what will happen, but it doesn't feel like a nimble technology business anymore. So my passion for big tech, my passion for big tech kind of died down. We could say ameliorated. And then at the same time, my confidence in traditional treasury strategies languished. It was pretty clear that if you have $500 million in cash and the interest rate goes to zero and it's going to stay at zero for 36 months, then it's like putting all your money in a savings account earning zero. Well, there's no upside. But if there's hyperinflation in assets or asset inflation, and you're holding all your money in cash, not only is there no upside, but you realize that there's downside. The real yield on cash is negative, but if you're tracking asset inflation, it becomes negative 20%. So if you want to be rich, or if you want to get rich, you can't track CPI. You have to track asset inflation. And so, you look at the S&P 500 and you say, well, I mean, that's the hurdle rate. So I think in March of 2020, I realized that you couldn't continue to hold cash. And the best idea probably wasn't the big tech trade anymore. So what is the best idea? And so that drove me on a search, and I found Bitcoin because I had a problem, and the traditional solution didn't look like a solution anymore. It looked like the bloom was off the big tech rose. So what would you like? You would like to have a big tech network that has like all the dominance of Apple or Google or Facebook, but without the company attached. So Bitcoin is big tech, but without the company. What you're getting is just the pure big tech network. No CEO, no board of directors, no product, no iPhone. There's no employees, so there's no one to unionize. You don't need an iPhone 12 to be competitive, because the product of Bitcoin is just the Bitcoin. And if Bitcoin just gives you 1/21 millionth of the network now, it's quite reasonable that 1/21 millionth of the network in 100 years is just as valuable, probably more valuable than one Bitcoin in 100 years is more valuable than one Bitcoin today. But you can see that one iPhone 3 today is worth nothing. Mm-hmm. Yeah. And one iPhone 12 in 100 years will be worth nothing. So the product that Apple is selling isn't going to last 1,000 years. The product that Bitcoin is selling is 1/21 millionth of all the money in the world. That doesn't have to change. It just kind of has to not break. So what I liked about Bitcoin was it was a digital gold or a digital property that you couldn't inflate. And it was on a big tech network that you could accelerate using computer technology. So call it digital gold without all the imperfections of gold. But the big tech element meant that you could plug layer 2 and layer 3 applications into it, like Square Cash, Lightning, Apple Pay, Google Pay. And if I plug applications into the Bitcoin network, then I can create smarter, faster, stronger gold, smarter, faster, stronger property. And pretty much the core principle of how you get rich or how you stay rich in the 21st century is you dematerialize something from the physical world to the digital world, and you make it smarter, faster, and stronger. If you digitize music, you create Amazon and Apple Music or Pandora, it's smarter, faster, stronger, and you give it to billions of people. And if you dematerialize CDs and DVDs or dematerialize concerts and Broadway shows, and you have YouTube. And if you dematerialize every library and every book and every university on the planet, you have YouTube and iBooks. And so the digital transformation of information and entertainment is how you provide joy and education to the world. Ergo, the digital transformation of property is how you provide wealth to the world. It's a very simple idea. It's not only Bitcoin, it's all the applications on top of Bitcoin, of which you've got PayPal and Coinbase and Binance and Square, but you have the BlockFi credit card. But MicroStrategy is an application on Bitcoin. Like our stock is a layer 2 application. Our debt is a derivative of Bitcoin. Our converts are derivatives of Bitcoin. So all sorts of things can plug into Bitcoin, and all of them are in essence, they're building applications and platforms on top of digital property in order to construct the 21st century cyber economy smarter, faster, and stronger, thinking 1 billion times a second, moving at the speed of light. So, that's how you do it. That's how people create value. You either build on the internet platform or the PC. Thomas Watson built on the mainframe platform, and Bill Gates built on the PC platform, and Jeff Bezos built on the internet platform, and then Apple came back and revitalized on the mobile platform. And now you got, the next platform. Digital property is a platform. It just made sense. So I discovered it because I had a problem. We adopt it first defensively in order to avoid losing all our money. Like if I told you, Natalie, I'm just going to take all your money next Tuesday, all of it, you would spend between now and next Tuesday researching to figure out how not to lose your money. But then after we figured out how not to lose all our money, we started thinking maybe we can use this offensively in order to grow the business. And that was serendipitous. It wasn't obvious to me all that would happen. But, the truth is, when I started in business, if you'd asked me what success was, I would have said success is if I could have one day afford to hire 10 people. And if you'd asked me at 10 people what success, I would say maybe one day we'll have 100 employees. It's like success is iterative, and you keep finding the next thing that you might be able to do. And so opportunities present themselves organically once you get into the market.
Yeah, well, I wanted to ask you because we have a mutual friend, Eric Weiss, and I know he helped orange pill you, but there was some tweet that resurfaced at some point, and I think it was even back in like 2013 that you said Bitcoin would die or something. So had you heard about it prior to that and just kind of passed it off and said, no, this is not going to work?
Yeah, I mean, I just read about it. I knew it was decentralized money. And I got the idea. It was kind of a cool thing. And there are a lot of like fanatic people that liked it, but it wasn't the solution to a problem I had. It was just one more thing. So there's 1,000 things you can invest in, Uber and Airbnb and Bitcoin and the next Instagram thing and the Bumble thing and Tinder and, and buildings and the like. There's always something. I'm not a venture capital. I just kind of focused on my things. I did alarm.com and I did angel.com and I did MicroStrategy, and it was just that long tail thing. Like a lot of people who are critics of Bitcoin, if you study it for an hour and you've got a lot of other priorities and a lot of other passions, you can find something to criticize about it. It's not very difficult to study somebody for a few minutes or an hour and come up with something to criticize. It takes 40 hours before you start to understand some of the nuances of it and why it's unique. It might take you 1,000 hours before you start to have some modicum of facility or expertise. And some people would say it takes 10,000 hours before you've mastered it. But pretty much anybody on earth, if you let them study it for 10 minutes to an hour or 2 hours, they'll just find something to not like or to be afraid of. In 2013, it was small. I didn't have a problem. I hadn't spent much time on it. I looked at it and I thought, well, maybe it'll go the way of online gambling. By the way, I liked gambling. I liked online gambling. I thought it was good. I didn't think it was a good thing that people outlawed online gambling, like they outlawed poker online. They would arrest people, going through Dulles Airport because they were running online poker sites. I didn't think that was a good thing. If people want to play poker online, why shouldn't they be able to? There was something called trade sports, where you could go online and you could bet on the outcome of elections or who's going to win the Olympic gold medal. I thought that was a cool thing too. And, the regulators cut off currency flows or like bank accounts to trade sports and shut it down. So I looked at Bitcoin. It was 2013. That was before the IRS even gave it property tax treatment. That was 2014. So I thought some regulator is going to shut it down, maybe. And then I tweeted and I forgot about it forever. And the Bitcoin community didn't really care much about me at the time either. So nobody noticed that. And Natalie, the joke, of course, is I didn't even remember I said it.
Mm-hmm.
Like years went by, and then about 6 other Bitcoiners tried to orange pill me from 2017 to 2018 to 2019 to 2020. And I didn't even remember when they did, or maybe I did. And then finally, when you get hit in the head with a 2x4, if you're in Lebanon and the bank seizes all your money, then maybe you would discover Bitcoin. Or if you're in a country or your family's in a country where there's hyperinflation, that's a wake-up call, and you discover Bitcoin. So the pandemic was a wake-up call, and the lockdowns were a wake-up call for a lot of people in a lot of areas. Maybe you figured out Zoom or discovered Zoom for the first time. Maybe you learned about YouTube and you could do stuff on YouTube for the first time. Maybe you discovered Twitter for the first time. So I had a problem. I discovered Bitcoin for the first time. And then when I finally put out that tweet saying we bought $250 million worth of Bitcoin, other Bitcoiners, they discovered my previous tweet and they threw it right back at me. And I was like, wow, I said that? Interesting. And I could have deleted it, but I thought just better just to leave it there, just as a reminder that sometimes we think one thing and then we change our mind.
Yeah, no, I was talking to Saifedean last week, and he admitted himself too. He was once an ignorant no coiner, but you have to go down that rabbit hole. And like you mentioned, it is really nuanced. You have to do a lot of research. And one of the things I found interesting that you've said before is that we're living in a time where the asset prices are so inflated. So people, out of like arrogance and ignorance, think that they're doing great because they have tech stocks, or maybe their house has really appreciated in value, but in the background, the money is collapsing. And they don't realize that we're headed for this, brick wall in a fast-moving train. So how do we get people to understand that? I mean, at what point how do you get hundreds of millions of Americans to really understand this system and what's wrong with it?
Persistent, cheerful, constructive, educational efforts through all channels available to us. I think your odds are better doing it on YouTube than doing it traveling door to door, knocking on doors. The 19th century way was knock on doors. There was a while when people would go from town to town, set up a tent and, preach, have a carnival, whistle stop tours. That's like how politicians used to educate. You could write books, but books don't travel the way they used to. I think that YouTube videos, podcasts, there's some cable networks. You have to build relationships, build alliances. You're educating people when you take your Bitcoin miner public. That's educational. MicroStrategy educated a lot of people when we bought Bitcoin. When we did our bond offering, we educated people in the bond market. It's not just educating individuals in the consumer world. You're educating across all dimensions, right? So like, is it more important to educate 1 million people with $1 or one person with $1 million? Or how about one person with $1 billion? It is, after all, it's a battle for the hearts and minds, but it's really a battle for the money.
Mm-hmm.
So I think anything you can do in order to educate investors is good. Educating politicians is good. You educate financial analysts. There's no one channel. We created a Bitcoin for Everybody course. You can go online, learn that. We created hope.com so that anybody can go on the web and they can get educated that way. I think you've got 100 different channels to educate people in 100 different countries.
Yeah.
In all languages, in all cultures. And it's a massively parallel, decentralized effort. I can't do stuff, in Korean and Japanese or Spanish, but there are other people that will look at what we might do if it's unique and translate it and take it to those local markets. And that's part of what's really wonderful about Bitcoin. Bitcoin, you could think of as as a bank in cyberspace, or the central bank, in cyberspace, or Ross Stevens might say that decentral bank in cyberspace. But everybody else can become their own fractional reserve bank using Bitcoin as the central bank. So when you set up your own exchange in Korea, you set up a branch of Bitcoin in Korea. And if you set up a mobile app that's a bank in Nigeria, you set up another branch of Bitcoin. So Bitcoin is creating its own system of thousands and tens of thousands of banks and applications, if you will. And so there is no one channel, hundreds of channels, hundreds of places with all sorts of different technologies all at the same time. And they're all, I just read about Spike Lee got hired to do a marketing campaign for a Bitcoin company that's pushing like cryptocurrency ATMs, something like that. Okay, well, that's education.
Yeah.
So every business, every investor, and every holder of Bitcoin is doing their own education. And if it's a business, they call it marketing. But if it's an individual talking to their family, that might be education. But if it's MicroStrategy, so we're holding billions of Bitcoin, and every time we talk to our investors or we raise money, we're educating the financial markets and our employees. And so they're all just different ways to educate. There's no one right way.
So you think people will just gradually learn and kind of jump on board. But I also wanted to ask you, you can't just keep printing money the way that we are, the quantitative easing and the fractional reserve banking. And we're at this point with the reverse repo and just historic highs for the NASDAQ and the S&P. Do you expect there to be some historic crash? Because some people are expecting that.
I think the way this will go is the bankers in the Western world will continue to inflate the money supply until they get to a point where they can't anymore. And they will pay for all the deficits with inflation until they can't. And at the point that they can't, they'll switch to taxation. And the taxation it'll come progressively in the form of income taxes. And then the third phase, it'll come in the form of property taxes. They won't be able to raise enough money with income tax, so it'll become a property tax. And before you recoil in horror, just keep in mind, in Florida, there is no income tax, but there is a property tax, and it's 2% a year on all of your real estate property. Maybe they'll assess the property up and it becomes 2% of property that's worth 50% more, and they raise their taxes 50%. Or maybe they'll extend it from just your residential real estate to commercial real estate to other forms of property. I think it'll be a political process. There'll be a lot of back and forth negotiation. Each state will do it differently. Each city will do it differently. Each country will do it differently. Each administration will do it differently. But eventually, they'll start taxing things more. maybe they'll say 2% of all your stocks, 2% of all your crypto, 2% of all your everything. I don't know. What I do know is that Bitcoin is the best property to hold when that time comes. If you hold a building in California, you won't be able to move it to Wyoming, but you will be able to move the Bitcoin from California to Wyoming. And if you have a building in the middle of Manhattan, it'll be hard to hide it. Everybody will walk past it and they'll say, there's a rich person with a building. Let's go ahead and tax that more. But if you have Bitcoin, people won't walk past you saying, well, that person's got a lot of money, because they won't be seeing it.
Yeah.
If I do pass a law, maybe if I jack the tax rate to 2, 3, 4% a year on land or a building or a company stock, you can't move the headquarters of Apple Computer to Monaco. You can't move the Rockefeller Center to Monaco. And you can't move the land underneath the Rockefeller Center to Monaco. But you can move $1 billion of Bitcoin to Monaco. So the Apple headquarters it's a beautiful piece of property, but it doesn't count as a fungible piece of property. A very rich corporation in Beijing is never going to buy the Apple headquarters when they have to sell it or they have to move it. So as we look forward, there'll be inflation, and you want to own property to protect yourself from inflation. But you want to own the highest quality property. And the definition of highest quality property is hardest to steal, hardest to tax, easiest to move, most desirable by everybody on earth. Also, easiest to upgrade. Why is an acre in New York City more valuable than an acre in the middle of Kansas? They're both an acre. The acre in New York City is more valuable because it's built on granite. It's very solid. You can build a 100-story building on it. It's not sand. It's not soil. But the second reason it's more valuable is because you can develop it into more things. There's a huge amount of demand for land in Manhattan or property in Manhattan because there's all this economic density in Manhattan. So you want to own the property where you can get the density, right? You can, in theory, put 10,000 people onto that acre in Manhattan, but you can't do that on that acre in Kansas. So if you're going to own property in cyberspace, what property do you want to own? If you own the Bitcoin property, right? Bitcoin you can develop because it's an open protocol. So you can build thousands of layer 2 and layer 3 applications on it anywhere in the world. That's why you want to own that. That's why Bitcoin is, if you have $1 billion of Bitcoin, that's why it's better than $1 billion of gold, or $1 billion worth of land, or $1 billion worth of real estate, or $1 billion worth of a company. All of those are properties, but they're easier to impair, harder to develop, harder to move. So if you're taking the long view, find the highest quality property you can, hold it for the long term. And I wouldn't worry so much about the political process, right? If the politicians pursue rampant inflation, the highest quality property will benefit. If they start to do income tax, if they crank the income tax to 90%, you want to own the highest quality property because that's the property that you don't have to sell. The way you avoid income tax is you never sell it. Low quality property can be impaired. And if you think it can be impaired, you have to sell it. And when you sell it, you'll take a capital gains tax. If you want to move from here to Monaco, you'll have to sell your property in wherever you live in order to go to Monaco, and you won't get hit with a capital gains tax or an income tax.
Right.
So high quality property protects you from income tax. And then finally, high quality property protects you from property taxes, because ultimately the highest quality property is going to be the hardest to tax compared to California taxing of buildings in California. If I tax 5% of the real estate property in California, I'm going to get it all.
Mhm.
If I tax 5% of the companies in California, I'm going to get that too. If I tax 5% of the Bitcoin in California, it's all going to move.
Yeah.
And so if you're making a law in California about what to tax, what's the point in taxing something that's going to move away from you when you tax it? And so that's my way of saying if it's the apex property, people aren't going to try to tax it as hard because it's hard to tax and they won't be successful. And so if you're not going to be successful, then there are fewer people attempting to target you as the victim. And let's say in the worst case, now, like how are you going to tax Bitcoin in the US? You can't tax it at the LA level. You can't tax it at the California level. You have to tax it at the federal level. So I can tax it at the federal level, and then people will move out of the country. And then you say, well, that's okay. If you're a citizen, you still got to pay it. Well, then I sell it to a non-citizen. See, then the question is someone that's not a US citizen going to want to own this?
Mhm.
And can I transfer it to them? They're not going to want to own your company in Chicago. They're not going to want to own your house on Lakeshore Drive. They're not going to want to own your ranch in Kansas. They're not going to want to own the building in New York, but they will want to own the Bitcoin. And so what you've got is this regulatory arbitrage where there'll always be somewhere in the world where they're going to want this thing, and that somewhere will be the highest bidder. And so when California, let's play this thought experiment out. If the governor of California were to levy a 50% a year property tax on a building in California, what do you think the price of buildings in California would do?
Decrease, everyone would leave.
Let's make it simple. Let's just tax them 100%. Okay, so you have $1 billion worth of real estate property in California. What's it worth after I tax it 100%? Nothing, right? That's called expropriation. Does it happen? Yes, it does happen. It's a socialist and communist thing when it happens. It happened in Venezuela to the oil company. It happened in Argentina. It does happen. Could it happen in the US? Yeah, sure it could. So when the politicians expropriate some portion of your property, what's a rich person in Monaco going to pay you for that? That's the question you ask yourself. And the answer is they're not going to pay you anything. They're not going to want to. When I tax your building in California 10% a year, it's going to be worth like 1/5 of what it was the day before I tax it. Will you be able to sell that to a rich person in Monaco? Probably not. But if you could, you sell it at 20% of what it was worth yesterday. But when I tax your Bitcoin at 20% a year, the day before that tax goes into play, you're going to sell it to someone who's the high bidder in the world, and they're going to pay you the pre-tax level. So if you're looking to protect your wealth, right, the way to protect your wealth is with a universally desirable scarce asset, which is portable and fungible.
Yeah. Well, I want to talk to you a little bit more about the long view because let's talk about the big picture. So let's say we adopt the Bitcoin standard. We convince people that it is the most pristine collateral, and maybe we even peg the dollar to Bitcoin. What does that world look like? And realistically, not rainbows and butterflies, but realistically, what does that world look like? Because I've seen you say that you see Bitcoin coexisting with the dollar.
I think Bitcoin becomes a reserve asset. Just like you can make it, MicroStrategy made it our reserve asset, and our stock is backed by Bitcoin, and our stock went from $120 a share to $600 a share. So you could make it the reserve asset in El Salvador and use the dollar that El Salvadorians have, or they could issue another currency, and then the currency strengthens. So I think what you have is a currency the government controls. It's like every company has a stock, right? What's the currency of a company? It's stock. So if a company adopts Bitcoin as its reserve asset, then the stock starts to be backed by the Bitcoin. So the best way to think about this transition is companies start to buy Bitcoin as their reserve asset, and then they have stocks that trade as derivatives of the Bitcoin. And then small countries buy Bitcoin, and then they have a currency backed as a derivative of the Bitcoin, and then larger countries. And over time, you would just think that Bitcoin becomes a larger and larger asset class. It goes from 1 trillion to 10 trillion to 100 trillion to 200 trillion. Are companies going to always have stocks? Sure. Just because I bought Bitcoin doesn't mean I gave up the right to issue stock or to buy my stock back or to do what I want with my stock. By the way, my company also has debt. So MicroStrategy has convertible debt, secured debt, and equity. We also have stock options. We also have restricted stock units. So I just counted 5 different derivatives of Bitcoin. A country can, or a city can buy Bitcoin as a reserve asset. And then a city can't issue currency, but they can issue debt. The city of New York could buy $1 billion of Bitcoin, and they could issue $1 billion worth of debt backed by the Bitcoin. A country, Turkey could buy $10 billion of Bitcoin, issue the lira. They can also issue debt backed by the Bitcoin. And so, or flavors of debt, municipal debt, sovereign debt, short dated debt, long-term debt, all sorts of debts. So in the old days, I mean, the gold standard was 1-to-1 backing. $20 of gold equals $20 of currency. The gold reserve standard was maybe 20% backing and 10% backing and 5% backing. A Bitcoin standard could be any number of things, right? That MicroStrategy could have put just 10% of its balance sheet into Bitcoin, and we would have had like a Bitcoin 10% reserve. Our stock would have benefited a little bit, but not a lot. When we went to 500 million, we went to 100% of our equity Bitcoin backed. The stock doubled. But then we went and we borrowed money. And so today, in theory, we're like 300 or 400% Bitcoin backed, right? And so our stock went up by a factor of 5.
Do you feel a pressure? I mean, I know that you bought many coins when it was at the 50 range and now it fell, you bought more. But do you ever feel like you're going to fall on the sword if Bitcoin were to fail?
No. Like I feel that Bitcoin is like fire or electricity. I think it's just a matter of time. I think it took the human race 100,000 years to figure out fire. So like that was a slow thing. I think it took the human race 20 years to figure out electricity, or 30 years. I don't think Bitcoin will take 30 years. I think information's spreading faster, but maybe it takes another decade. We pursued a strategy, to develop, to own, and to develop Bitcoin. And so we're comfortable with that strategy. And we've got a long time frame. So I think we're prepared for all the volatility in the near term. And I think time is on our side. I think there's more than 100 million people that have Bitcoin, and there's tens of thousands of companies that are all doing something to commercialize or evangelize or upgrade and develop Bitcoin. So I think we're in good company. I enjoy watching all of the developments in the ecosystem, and we'll do our part and everything we can do, but we won't be the only ones working on this. There's a lot of other people everywhere in the world in every industry working equally hard or harder.
Yeah, so there isn't a price at which you would be forced to liquidate any of your Bitcoin if it fell too much?
No.
Okay. Well, I want to talk a little bit about Bitcoin Mining Council, because I know that there is this narrative out there that obviously Bitcoin mining bad for the environment, and you want to be one of the people that breaks that narrative. And curious, for people that aren't familiar, can you kind of speak in general terms what the Bitcoin Mining Council is, and what would Bitcoin's impact on the environment be if it was to become a global reserve asset?
Well, the Bitcoin Mining Council is a voluntary open forum of Bitcoin miners. And we just gather together in order to educate the world on the benefits of Bitcoin and Bitcoin mining, and spread some best practices and and information. Bitcoin itself right now it might be using 0.1% of the energy in the world. It's negligible. The energy usage of Bitcoin is negligible. It's measurable because it's transparent, but 99.9% of the energy is going to other things. The Bitcoin mining network is really the security network of Bitcoin. It's millions of different machines that are all running the SHA-256 hashing function in order to throw up a wall of encrypted energy to protect your money. In that case, it's quite an achievement. It's the first line of defense for Bitcoin. It's protecting the network. It means that all of those machines everywhere on Earth are preventing any malefactor from stealing your money or screwing with the network. The way it works is you're combining technology capital with energy capital. So the technology is like 7th generation Bitcoin mining rigs. There'll be another generation. Each generation of Bitcoin mining rig is 2, 3, 4 times more efficient in converting energy into hashes. I think they measure, they measure the amount of energy per hash. It keeps dropping. The S19 is about 5 times as efficient as the S9 generation. The S9 was much more efficient than the previous generation. The Bitcoin mining network is probably peaked. I suspect it's peaked in carbon emissions probably last year or early this year. And that will decrease from this point forward. It might have peaked in energy usage. If it hasn't peaked in energy usage, the energy usage is likely to increase with the log of the hash rate and the Bitcoin price, not linearly, certainly not any kind of power function. Because what's happening right now is that each new generation of equipment generates 3, 4, 5x as much terahashes per megawatt as the previous generation. And that means that all of the aging equipment is the energy intensive equipment, and that's all becoming obsolete. And the new equipment is driving up the hash rate, driving the old equipment off the network. So ultimately, what you're going to have is a very decentralized set of specialized mining rig nodes that are security nodes that use some energy, but the energy, as far as we can see, is already more than 50% sustainable, and it keeps creeping up. Our estimate is 56% sustainable on a worldwide basis right now, and growing in sustainability faster than any other industry in the world we can find. And it's more efficient than any other industry in the world. So if Bitcoin becomes a $100 trillion or $200 trillion network, that the amount of energy used is, it might be 3 times as much or 2 times. It might be 0.2% of the energy in the world instead of 0.1% of energy in the world. It might be 0.3% of the energy in the world, but it'll be clean, renewable energy distributed through extremely efficient, specialized mining nodes using extremely efficient ASIC mining rigs. So, it's not really a concern. The transaction velocity or the transactions in the Bitcoin network don't drive energy usage at all. There's no relationship between putting a transaction through an energy usage. All the energy is just the fixed cost to secure the network, and the incentive to burn that energy is falling exponentially, because every 4 years, Bitcoin block rewards get cut in half. And so by the time we get to 2035, 99% of the Bitcoin will be mined. And so I think if you look right now, about 2% of the entire network, it becomes revenue to the Bitcoin miners, but only 20 basis points of the network is transaction fees. And so as the block rewards fall in the limit, we go toward just that 20 basis points, and that 20 basis points is falling. That's going to scale with the log of the price. So that means you can expect, as you look out 20 years to 30 years, you can expect that you'll have 5 to 10%, 5 to 10 basis points, maybe 5 basis points of transaction fees. Now compare that to the Visa network, which charges 2.5%. So if you're looking at inefficiency in the network, right, that's 250 basis points in the Visa MasterCard network, and Bitcoin will be 5 or 4. And it's a market-driven competition. It's the most vicious competition imaginable. And people are competing to get zero cost energy, and then these mining rigs that are 100 times more efficient than the last one. And you can see where this entire thing ends, which is a very efficient distributed mining network running on the edge of the energy grid on sustainable power that generally that's stranded and intermittent, because the miners will find the cheapest waste energy they can find, and they'll monetize that stranded intermittent energy. It tends to be like, the volcano on the island 1,000 miles away from anybody, right? That's what they'll be doing. And they're not going to be doing it with energy of intensity so much. That's a secondary thing. They're going to be doing it with the next generation of SHA-256 mining rig, which is going to be 5 or 50 times more efficient than the current generation in converting energy into terahashes.
Well, I know you've spoken to Elon about this, so can you offer any insights into why he tweeted what he did and sort of where your conversations went since then? Like, do you expect him to kind of do a turnaround and be more supportive of Bitcoin now that more of the information is out there on just how much renewable energy is being used?
I think he just read some media that suggested that Bitcoin had encouraged someone to bring a fossil fuel plant back online, and he wants to make sure that there's information and substantial documentation that we're the good guys and we're actually driving a clean, sustainable energy mix for the planet. He wanted to make sure that the Bitcoin community communicates that, and he expressed his concerns.
So you don't think there was any agenda or anyone, over his shoulder? I know, I think Jeff Booth, when I was talking to him, thought it was maybe BlackRock talking to him, or some people thought it might be the government because he gets, so many subsidies for fiat. But you don't think any of that?
I don't read too much conspiracy theory into these things. I think that people just see something and they say something, and you should just take it at face value. You know, he would like to be associated with technologies and with movements that are making the planet greener and more sustainable and progressive. And his view is if we can drive renewable energy and sustainable energy, then that would be a good thing. And he'd like, I think, the Bitcoin community to show that that's what they're doing.
So what will it take to get other big corporations like the Googles and the Apples and the Facebooks into Bitcoin? Do you just expect it's a matter of time, or what's needed to make it happen?
I think on the operational P&L side, I think they'll build Bitcoin into the Google Pay, Apple Pay, into Facebook, because they need to do that to compete with PayPal and Square Cash. That'll happen naturally because of the tech imperative. And I think they'll do that because that's in their best interest to do that. I think on the balance sheet side, the most important thing would be the accounting treatment. Right now, accounting isn't kept up with the rate of technology advance. And most of the rules surrounding accounting for digital assets were put in place before any public companies owned any. A year ago, you couldn't find any public companies that owned $10 million worth of digital assets. And now you have billions of dollars held in public companies. The current accounting treatment is to treat digital assets as an indefinite intangible. An indefinite intangible would be, you could characterize it as the most conservative accounting treatment you could apply to any property or any asset. If you were to apply indefinite intangible accounting treatment to your apartment, that would mean that you start by booking it at the price you paid for it. And then on Saturday night, when you're out at a party, you go to every single person, even the drunk ones, and you ask them if they'll buy your apartment from you. And if they say yes, you ask them what they'll pay for it. And if they say, I'll give you $100, then you have to write down $100. That's the price for the apartment. You go back and you account for your apartment as $100, and you write it down to $100, and you take that as an operating loss for the period. And you say, looks like I lost all that money on my apartment. And then later on, if the rest of the world thinks it's really worth $10 million, you still carry it on your books at $100, because once upon a time, the market value of the apartment was $100. So you see, it's a prejudicial accounting treatment. And the fair value would diverge radically from the gap or the book value. And that creates an opacity situation where, if I'm looking at your P&L, it looks like you have $100, but you own a $10 million apartment outright. And now I say, well, it looks like you're poor, Natalie. I'm not going to invest in you. And you're like, well, why, let me explain. And so then you start explaining, and then I get distracted and I go talk to the next person. So it's very complicated to explain your balance sheet and your P&L when you have indefinite intangible accounting treatment. So if you're a conservative CFO at Google or Facebook, you're going to look at this and you're going to say, I just spent 20 years creating a optically beautiful P&L and a beautiful balance sheet. And if I put this asset on my balance sheet, and if there's volatility and it trades down, then I'm going to have to take these big write-offs, and I'm going to have to explain it to the shareholders. And I don't want to have to explain anything. So I think the short is, accounting is probably one of the single biggest drivers that if that is ever placed at parity with other securities, like if they give it accounting that's similar to the way an ETF or a stock or another asset is accounted for on a public company balance sheet, that would remove a big hurdle for a lot of treasurers and CFOs. There are other things, but I think that's probably the most interesting thing that I could put my finger on right now.
Well, on the retail level, we're in such an interesting time with all the meme stocks and crypto speculation with the altcoins. And I think Peter Schiff tweeted just last week or so that a lot of people are buying Bitcoin to get rich. People buy gold to stay rich. People are buying Bitcoin to get rich, which is essentially why he thinks they'll be poor. So what are your thoughts on that?
I think you have a much better chance of getting rich buying Bitcoin than buying gold. I think that if you want to get rich, then you want to find some big tech dominant digital network that everybody needs, nobody understands, and nobody can stop. So who are the rich people in the world? Steve Jobs got rich on Apple. Bill Gates got rich on Microsoft, right? Mark Zuckerberg got rich on Facebook. Jeff Bezos got rich on Amazon. Larry Page and Sergey Brin got rich on Google. What's their criteria? They all created a digital network that's dominant, that everybody needs, that nobody could stop, that nobody understood when they bought the stock. And then they didn't sell it. If Jeff Bezos had sold Amazon stock when it traded down 80%, and it did that 5 times, it traded down 95% once. If he had sold it, if he hadn't had, had the courage to hold the thing when digital retail traded down 95%, if he hadn't held it, he wouldn't be the richest person in the world right now. Steve Ballmer is worth $100 billion. What did he do? Didn't sell. Like, what was the brilliant thing that Steve Ballmer did in order to be worth $100 billion? He didn't sell Microsoft. Okay, so what do they have in common? They're all big tech. If you have a big tech network and you can put hundreds of thousands of businesses on it, or tens of millions or hundreds of millions of people on it, and you can replace something in the physical world in the 20th or the 19th century economy, then you've affected a digital transformation of the civilization. The problem with gold is you're not doing a digital transformation of the civilization. It's a 5,000-year-old idea. it stopped working in 1914. So if you want a good digital transformation idea, Twitter, Facebook, Google, Square, Bumble, Tinder, Uber, Airbnb, it's Instagram. It's not complicated. We've got 100 examples in front of us. The digital transformation of blank. Bitcoin is the digital transformation of property. Gold is not. You want to get rich, your only hope is to find either to create an asset that is going to appreciate by a factor of 100, or to buy an asset that is going to appreciate by a factor of 100. The only assets that will appreciate by a factor of 100 or 1,000 are by definition assets that 99% of the population doesn't appreciate or understand. If you go down the street and you ask 100 people, do you think Apple is a valuable company? You're going to find that 50 of them agree with you. If you would ask the question 20 years ago, do you think Apple will become a $1 trillion company? The answer is no. I mean, at one point in time, Michael Dell said to Steve Jobs, back in 1997 or so, you should give the money back to the shareholders and shut the company down. If you went back to 2007, when they roll out the iPhone, everybody didn't agree with them. Okay, well, maybe it wasn't going to work. By 2009, you could see it was going to work. By 2010 or 11, it was pretty obvious. By 2012, 4-year-old kids wanted an iPhone for Christmas. So in 2012, 9 years ago, 4-year-old kids wanted an iPhone. And if you gave the girl an obsolete eBayed 2-generation back iPhone for her birthday, she throws a temper tantrum because nobody wanted the old iPhone. They wanted the new pink iPhone, whatever. So you had that observation, and yet still 98% of the world didn't quite get it. You could have made some money. If you want to get rich, you're going to have to actually buy something that the majority of the uneducated public doesn't agree with you on and doesn't understand. When you do that, you're going to have to have studied enough so that you have conviction that you're right and not they're right. If you've studied something for 1,000 hours and they've studied something for 1 hour and they think it's garbage and you think it's good, then you can reasonably assume that's a chance for you to make a wise investment that'll make you money. If you've studied it for 1 hour and they've studied it for 1 hour, now you're just going to be in a coin flip. You don't know. You're going to be easily swayed. So I think in general, Bitcoin meets the criteria. It's something that is a big tech network that is underappreciated, that has massive upside potential because of the technology and because it's a solution to everybody's problem on the planet. Gold and silver are not the solution. There are plenty of other digital solutions from Amazon, Apple, Facebook, Google, but they're already mature and they're probably not bad investments if you're looking to get a 10% return or 15% return. But I don't think you're going to get the outside returns from those things because 2 billion people already understand what they are by now. And so you're not going to be first.
Yeah, but along with that idea of, getting rich on Bitcoin, I think it breeds a little bit of that toxic maximalism. Do you see that? I mean, the memes of have fun staying poor. Do you think that helps or hurts the community?
I think the best thing for the community would be for us to cheerfully and constructively engage with everybody with any influence, power, or money. If you've got a lot of money, we need you to understand, appreciate, and invest some of it in Bitcoin. If you've got a lot of power, we need you to support Bitcoin. And if you get a lot of influence, we need you to educate the world on Bitcoin. So if when you approach someone and they don't understand it and you just tell them they're just stupid and they're just going to stay poor, then they're more likely just to remember that you you were mean to them or insulted them, and then they'll fight you harder. And it's not so easy for people to change their mind after they've been insulted,
Right.
even if they're wrong. So th- even if they're wrong, I think even if you disagree with someone, it's better to constructively engage with them. And I think I think my mother said, if you can't say something nice, don't say anything at all. So if someone's just totally wrong and I can't say something nice, I probably just won't say anything, because I don't think anybody gets bullied into changing their mind in this world.
Right.
Like I haven't seen it, right? Um, you're not really going to, you'll feel better when you push them, but you can't really get them to change their mind. You have to entice them constructively and cheerfully. And then they still may not change their mind, but it's a long game. It's a marathon. Maybe it'll take you a decade. Maybe it'll take you 20 years. Maybe they'll never change their mind. But you'd be better off to have them neutral and just say, oh, I don't know if I like Bitcoin, but I don't hate it. I'd rather have them not hate us and not like us than have them hate us, because someone that hates you will block you out of spite. And there are worse things than them not loving Bitcoin or not buying Bitcoin. The worst thing is people deciding they want to actively attack you. So
Yeah.
there's no point in making enemies.
Well, you're the beloved Hornet Lord. I'm going to go so far as to say you're almost like a father figure in this space. Max Kaiser's maybe like the fun uncle, but I mean, to really get the message across, women have so much spending power. Does Bitcoin need a mom? Does Bitcoin need like a queen bee to maybe rein in some of that maximalism, or, maybe check out what someone's wearing before they meet the president of a country?
That's a fine idea, Natalie.
Is there anyone in this space? Like, how do you get more women in it, or who do you see as potentially that person to serve in that role?
I think we just have to continue with outreach, and we got to find every place where female investors look, in any place. I think technology groups. There are three vectors or three value propositions of Bitcoin. It's a moral hazard. Or sorry, it's a moral imperative. It's a legal imperative. Sorry, let me check myself. It's a moral imperative. It's a technical imperative. It's an economic imperative. So we're going to find clubs of women that are focused on investments, and we need to explain to them why this is a good investment strategy. We're going to find women that are activists, for social justice and to empower the world and economic rights. And I think we show them how that can be a tool of economic empowerment. And then you've got groups that are just all about the next technology thing. Technology entrepreneurs, women as technology entrepreneurs. This is a solution for you to launch your next company. Like when Bumble came public, right? The CEO of Bumble became a big spokesperson and a big role model. Well, so how did she get to be a spokesperson and role model? Well, you got to start a company. You got to start a company using a modern platform, and then you got to take it public. And now you have the ability to provide leadership and inspiration for other women who will follow in your footsteps. So I think we do the same thing. I think there's already a lot of good female spokesmen in the space now, but we can't have enough, and I think more will come. Maybe that queen bee will be you, Natalie.
Maybe I might have to.
Maybe it already is.
Well, I'm going to start to wrap up. I just have a few last questions. I just kind of wanted to ask you, looking back on your career, I know that failure has been something that you said has shaped you a lot. The successes are great, but the failures really help you progress and move to the next level. So what was your biggest failure as a CEO and the lesson you learned from that?
I think one point I remember we were a little bit short of money, and I thought that it would be wise just to cut everybody's salary by 10% across the board. That didn't go over so well.
Including yours?
Like a lead balloon, yeah, like including mine, but I think I cut mine more than that. But I think that there are mistakes you make when you're first getting started, and you learn that you got to put the people first, and you have to protect your employees, and they're expecting you to protect their interest. And that led me just to appreciate the fact that you just got to be thinking about all your constituents all the time, your employees, your vendors, your customers, your investors, the community. And everybody has a set of interests that they need. And generally you get in trouble if you pursue too many agendas at the same time. So my takeaway from all of that was stoicism. Don't spend money you don't have. Laser eyes. I think the laser eyes metaphor is you really got to focus upon one point in the distance and not get distracted and by everything along the way. There's 100 good ideas and there's 100 battles you could fight. They're all just going to dissipate your energy. And ultimately we don't need to fight the battles. I mean, they're all out there. We can't afford to fight all of the 100 other battles, and we can't afford to pursue every single good idea, right? We can only pursue a very narrow range of ideas in life. And when you start to pursue too many ideas, you dissipate your energy. That's when you're not profitable anymore. That's when you run out of money. That's when you start telling your employees they got to take a pay cut, and then you just realize that your entire organization starts to break down. And if you're arrogant, you don't realize that the problem is your lack of focus. It's like I told my family that we have to do 16 things on the family vacation, and there was a disaster and everybody's upset and fighting with each other. And if you're arrogant, you don't realize that, well, maybe you're overly ambitious. Maybe you couldn't do 16 things. Maybe you could do 2 things or 3 things.
Yeah.
So I think the lesson of business is have some humility. Don't overestimate what you can do. I don't regret my bad ideas, because bad ideas are obvious on inspection as bad, and then you don't pursue them. I regret my good ideas that I pursued to the detriment of my great ideas, right? You could do one thing well, and then you start to do the second thing, and then the third thing. And by the time you get to the fourth, fifth, and sixth thing, you're not doing the first thing well anymore. And then you start to let down your constituents, either your shareholders or your customers or your employees. So you can boil it all down, I think, to don't fall in love with every idea, and don't get in a fight with every dog that barks at you while you're walking to work, because there's always going to be someone that's going to pick a fight with you, and you're always going to have another good idea. And the question is that good idea dilutive or accretive to the current thing you're doing? And if that good idea is going to further your main mission, then maybe you consider it. But if that good idea is going to distract you from your main mission, or divert you, or split your energies 2 or 3 or 4 ways, you're not a laser anymore. You're this wide angle searchlight. And then eventually you just become some massive bonfire, and maybe you're hot within 4 feet around the bonfire, but there's no way you're going to punch a beam 10 miles away. And if you want to accomplish something, you really need to focus your energy and stay focused.
That's really, really good advice. Are you finding yourself always checking the Bitcoin price, since you now have more than 100,000 coins?
No, I'm not always checking the price. I stay aware of where it is when I'm about to go on television, if I think someone's going to ask me the price. But ultimately, I've got a 10-year view on it. I mean, if 4 years from now the price is lower than it is right now, I'll scratch my head and try to figure out what to do about it. I'm not worried about it 4 weeks from now, 4 days from now, or 4 hours from now. And I think that, I think you just got to come back to Warren Buffett's observation. If you wouldn't hold something for 10 years, you probably shouldn't hold it for 10 minutes.
Yeah, that's good advice too. Well,
I
so
think the faster you check, the more likely you are just to give yourself anxiety. It's like if all I do is obsessively, compulsively, like check the news, check the markets, etc., then you're just poking yourself or inflaming yourself, and it's a distraction, and you can't get work done.
if President Biden called you, what would you say to him about Bitcoin? Or maybe Powell or Yellen? What would you tell them?
I would tell them Bitcoin is digital property, and it's the basis for us to build a 21st century economy, which is going to be an order of magnitude more efficient than the 20th century economy. And Bitcoin is the transformational technology that the United States is already harnessing in order to make the US dollar the world's reserve currency, to make US technology the dominant technology, in order to elevate US technology companies, in order to drive up the quality of life everywhere else in the world and spread American culture, law, and values. And it's a good thing. And the same way the internet was a good thing, in the same way that electricity was a good thing, in the same way that the telephone was a good thing. They called it American Telephone and Telegraph, and we have the +1, the first area code on the international telephone network, because we invented the telephone. And so America also happened to invent digital property, right? Regardless of who you think Satoshi is, I think we're highly confident it's probably came out of the West, and it came out of the US somewhere. And so I would encourage President Biden to take advantage of this technology and in order to continue to spread prosperity and American values to the world.
Well, I know you already touched on how you don't think that governments could tax it very easily. And you've mentioned on other podcasts that you think the only threat is like a true black swan. But, government is so protective of their monopoly on money. And you've also said that Bitcoin would suck value out of other asset classes like bonds. Governments finance themselves with bonds. So, I mean, it's really a threat to them. So do you see Western governments attacking Bitcoin?
I wouldn't characterize it as a threat, and I wouldn't characterize it as money or as currency. That's why I say that it's digital property. It's not digital currency. I wouldn't call it a digital app or a digital currency. I would call it digital property. It's a threat to property. It's particularly a threat to other forms of property. Gold is property, real estate is property, but I don't think the United States government is threatened by real estate or buildings or companies or gold in the United States. As long as it's property in the country and it doesn't leave their tax jurisdiction and it abides by property tax and transfer laws, I think it'll be tolerated like other properties are tolerated. So I'm not really concerned about that. The thing that people ought to be concerned about is attempting to make it a currency. That's why there's no point in spending huge amounts of time trying to replace the dollar. We don't need to replace the dollar. There's $400 trillion worth of property, money and property. What we need to do is replace the S&P index and savings accounts, and we need to replace gold, and we need to replace other types of property like houses that are monetized to be stores of value. And I think the government's, you're going to pay taxes on your Bitcoin. I mean, like you pay when you sell your house, and when you sell your gold, and when you sell your stock, and when you sell your bonds, if you have a capital gain on them, you're going to have to pay capital gains tax on it. So that's the way I see Bitcoin, as digital property. It should be no more threatening to the government than digital music or digital books are threatening to the government. That doesn't mean, by the way, they won't regulate it. I mean, the government will, digital video, right? I mean, YouTube is allowed to exist, but there are people with concerns about what video. You can't just post any video on YouTube, right?
Right.
So there are regulations in the world, we have look, you can't even, there are regulations about what movie you can go see, right? There's regulations about whether or not you can wire $1 billion to your friend in Africa on a weekend. You can't, but it doesn't threaten the American way. And so I think here, digital property is just it's just the basis of the 21st century fintech economy. The US is the big winner, the big beneficiary. If US companies own the Bitcoin, if US companies like Square and PayPal and Coinbase trade or manage the Bitcoin, if US companies like BlockFi move the Bitcoin around, if US companies like NYDIG integrate Bitcoin into insurance and mutual funds, if US banks sell the Bitcoin, then the US will benefit from the Bitcoin. So that's what I think about that. The rest of the industry is like digital currencies, like Tether. That's a currency that competes with the US dollar. That'll be regulated like a currency. That's a totally different world. And then there's digital applications or decentralized apps on crypto networks like Uniswap or SushiSwap. Okay, eventually regulators that regulate exchanges will regulate decentralized exchanges, right? There'll be something there. They'll have that question that'll be hanging over their head. I'll let them deal with it when the time comes.
Going back to the topic of taxes, Biden recently said that more than 50 of the Fortune 500 companies that are making billions of dollars, they're not paying taxes. Does Bitcoin fix that?
The companies that he's referring to that aren't paying taxes are really companies that are multinationals that operate in like 100 different tax jurisdictions. And he's really just referring to the fact that there's tax jurisdictional arbitrage, and some places charge a differential income tax than others. I don't think ultimately Bitcoin has much impact on income taxes, because all those companies are really doing business in fiat currencies. So the thing that'll have more impact will be this tax treaty where they decided that every country should have a minimum tax rate of like 15%. That will change that. But ultimately, the issue of international taxation is really a question of which country gets to tax a multinational. It's a very complicated question, and presumably it's above my pay grade. Like it's very complicated, right? And there's lots of different theories about where did Google earn their money?
Yeah.
Did they earn their money from the engineering they did in San Francisco, or did they earn their money when they sold the advertisement in Paris? Or did they earn their money from an asset that they bought from someone in New York 10 years ago or something? And lawyers will debate that, and accountants will debate those things for a long time. So I don't think Bitcoin has much bearing on that one way or the other.
What do you want your legacy to be?
I have no heirs, but I have a foundation, and the foundation is dedicated to making education free for everybody forever. And right now they're doing that on Saylor.org. They give away free college education, and whatever wealth I have will just flow into that foundation. And I think there's probably plenty of work to do making education free for everybody forever. There's a lot of education to make. You can upgrade it, and forever is a long time. So we'll see how long they last. But if I take my Bitcoin and I use it to endow the foundation, I would think that the interest off the Bitcoin will probably power the foundation for as long as Bitcoin lasts. So I guess my interest is just make sure that that Bitcoin becomes all it can be, and we nurture it so that it can last 1,000 years. And if Bitcoin lasts 1,000 years, then the Saylor Academy becomes the Saylor University, and it becomes the Saylor whatever, and it gives away free education. And I'm reasonably confident that people will want education for a long time to come, and they'll want it for free. Maybe 1,000 years from now, you'll take a pill and you'll just be smart. But maybe we'll invent that pill. Maybe someone that works for someone that works for someone that gets hired by someone that gets hired 100 years from now. We'll figure that out. I don't know. If I can contribute to that, then I'd like to, but that's the general plan.
Well, this might be too personal, but was that a choice? You didn't want to have a family or heirs?
Just worked out that way.
No queen bee in your life, I guess. All right.
Bitcoin is my queen bee.
Well, thank you so much. I really appreciate all of your time. And, final words on Bitcoin for all the people out there, whether they're already invested or just brand new and think, maybe should I? Should I?
Bitcoin is like electricity and fire. It's digital property. It's the first thing. We're in the second decade of Bitcoin. There's extraordinary opportunity to do good with it. Either if you're a politician, you can do good with it. If you're a business person, you can do good with it. If you're an investor, you can do good with it. If you're a technologist, you can do good with it. If you're a philosopher or an academic, you can do good with it. I would encourage everybody to study it, understand it, figure out how to do some good with it.